All right, good evening, everyone. Thanks so much for joining us on this webinar this evening, Home Buying 101, where we are going to talk a lot about what goes into finding and purchasing a home. My name is Jessica Sims. I am our event manager here at Compass Mortgage, and I am joined by Caleb, our loan officer of Compass Mortgage, as well as Liz Jones from KW1 Chicago. So they're going to introduce themselves here in a moment. But just a quick reminder and a housekeeping item here is that if you do have any questions throughout this, you can certainly send those in the chat box. And then we will go over all questions at the end of the presentation. And then we will also be pulling a raffle winner from all of our attendees. So at the end of the webinar, we will pull the raffle winner and then announce that in a follow-up email tomorrow, and I will reach out to you directly as our winner. So without further ado, Liz, why don't you go ahead and get us started and introduce yourself.
Awesome. Hi, everyone. I'm Liz Jones. I am with Keller Williams 1 Chicago. I work out of our Lincoln Park office. And I've been working with Caleb and the Compass team for a few years now. I absolutely love assisting buyers purchasing their first homes, sellers all throughout Chicago. I work pretty much all throughout Chicagoland. And it's just a huge passion of mine. It always has been. I have real estate in my family ties. So it really is just a really fun, gratifying thing for me to be able to support everyone when they're buying probably the biggest purchase of their lives. So I look forward to giving you guys some information on how the home buying process works and make it as simple and fun as possible.
Awesome. Hey everyone, my name is Caleb Jennings. I'm with the Kambs Jennings group of Compass Mortgage. We're an independent mortgage bank, which means that we underwrite our loans in-house, we fund our own loans. So we really pride ourselves on educating our clients and empowering you with knowledge. We think is key. We also have a real holistic approach to how we do it. There isn't a one size fits all. Everyone is unique. Everyone has a unique situation. Everyone has different goals. So we really like to hear from you, learn like what your goals are, what you want to achieve to help you achieve that. And so I'm going to go ahead and start this presentation to walk through what we're going to be covering today or tonight. So a few things that we'll be covering is one is just renting versus owning, because I think a lot of people ask us that. Should I continue to rent? What are the pros of owning versus renting? We'll hit on that. We're also going to touch on where interest rates are at and also on budget. When you buy a home, we want to make sure you have eyes wide open as to what you're getting yourself into, as what it costs. And then we're going to cover the life cycle of a purchase transaction. And then we're going to open it up for questions and answers. So I encourage you all, if any questions you have, like Jessica said, put them in the chat box and we will be sure to address every question. So I'm going to go ahead and move forward here. So renting versus owning. So what are the pros of renting? Well, when you rent, you have the flexibility to move. You can move wherever you want. You can, break your lease. You can do whatever you can do that. There's also low transactional risk. You don't have that much risk when you're renting, unless you have a lousy landlord, I suppose. And then there's just fewer repair costs. It's on the landlord to cover the costs. And for those of us now with the snowstorm and all that, you probably didn't have to shovel your sidewalk like a homeowner and things like that. So, you got to get ready for that. With ownership, the advantages are, there's pride in owning your own home. It's yours. It's your possession. And then there's potential financial gains, which we'll touch on as well. And then there's tax deductions. When you pay rent, you're really, paying your monthly rent that's going to your landlord. Your landlord is creating equity with that. And your landlord gets to write off the mortgage and the interest and all that. You don't. So there's tax advantages that you have to homeownership. So what are the real estate values doing? And I'm looking specifically at Chicago, but I can tell you nationally, real estate values have been going up, but in Chicago, they're increasing for sure. So if you look at that, we just looked at a snapshot of the city of Chicago. If you look at December specifically, from 2019 to 2020, so December 2019 to December 2020, In December 2020, there was 2,245 properties sold in the city of Chicago. That was up 18.7% from 2019. And the median sales price was 307,500. That's up 11.6%. What that means is if you bought a home in Chicago in December of 2019, that your property value increased by 11.6%, which is pretty remarkable. So let's look at some of the costs then, comparing rent versus owning, okay? And what we looked at is over a 5-year period. So if you were to get to a 3-bedroom, 2-bath comparable rental versus a $400,000 condo, and if you were to put 5% down on the condo, this is basically looking at a 1,500 to 1,800 square feet. With rent, you look at 60 payments at $2,500 a month, that's $150,000. With a purchase, and I'm going to cover some of these mortgage payments up here, but a mortgage payment would be about $2,319 all in at 60 payments. That's $139,140. But you also have to come up with a down payment and closing costs, which out of your pocket could be about $27,800. And then when you make that down payment, you're also going to have a principal reduction. So the $400,000, the principal reduced, $342,293 is what you now owe. And the appreciation, we're being very conservative here because like I just said, December to December, it's appreciated a lot more. But we're saying if it just appreciated 1.7%, that $400,000 home you bought 5 years ago is now worth $435,174. So if you look at the value minus the principal reduction, that's $92,881. So looking at that, $166,940 in costs minus that $92,881 equals $74,059 in net costs of owning versus $150,000 for renting. So let's look at interest rates because I think this is really significant, especially right now. And just kind of looking over the years, at 2012, interest rate average was 3.66. 2016, 3.65. Right now, we're looking at 2.74. If you look at just from November to December, November to January of 2021, it's averaging 2.74. Buying power right now is the greatest it's been pretty much ever in history. So that means that, you know, buying a home, you're going to get a lot more home for a lot less money than you would have. So, you know, the $1 million question is how much to save and budget. So again, going back to this $400,000 purchase price example, what I want you to be aware of is down payments. So with the down payment, there's conventional programs where you can put as low as 3% down all the way up to 20% down. So again, it's going to depend on what your goals are, what you're trying to achieve. But on a $400,000 home, that's going to be anywhere from $12,000 to $80,000 down. So you have a down payment, and then there's closing costs. So we always tell our clients, if you want a back of the envelope kind of rough way of estimating closing costs, just add another 3% onto the purchase price. Now, again, that's a bigger number. It's generally a little less than that, but that's a good way to just to be conservative, eyes wide open. We don't want you to get sticker shock. We want you to be ready. But what goes into closing costs? There's a lender origination fee. There's title fees. If you're buying in Chicago and some other towns and cities as well, there's a transfer stamp. Then there's prepaids and there's third-party fees. So lender origination fee, if you're looking for a lender, really the only thing the lender controls if you're shopping for a lender is the lender origination fee and their interest rate, okay? It's because title fees, the transfer stamp, the prepaids, the third-party fees, those are gonna be the same wherever you go. So I always want our clients to understand that because I think there's gonna be a lot of confusion in numbers sometimes. At the end of the day, when you're shopping, that's what you should be asking about. Compass Mortgage, our lender origination fee is $14.49. Title fees, if you wanted to, again, round up, they could be anywhere from $2,500 to $3,000. The Chicago transfer stamp is going to be, if you're in Chicago, you split that with the seller, it's 0.75% of the purchase price. prepaids. What prepaids are, it's kind of what they sound like, is that when you buy a home, it has to be fully insured with homeowners insurance. That means that when you close on that home, you'll pay a full year of homeowners insurance. And if you're escrowing, you're also going to put in an additional 2 to 3 months of that mortgage insurance, of that homeowners insurance into an escrow account. As well, you're going to also be putting into escrow your property taxes. So in Illinois, the property taxes are paid in the arrears. That means for folks right now, property taxes coming due in 2021 are really for 2020. And so when you are escrowing, you're going to be putting away anywhere from 4 to 6 months of your property taxes you'll bring to the table. However, you'll also be getting a credit from the seller for the property that they lived in if they haven't paid the property taxes on it yet. So sometimes that's a wash as well. And then there's third-party fees. Third-party fees are when you buy a home, you're going to get an attorney that you'll be paying for. You're going to get a home inspection that you'll pay for, and you're going to get an appraisal that you're going to pay for. So we really want you to be eyes wide open, because there's a lot of times people say, "Oh, I just thought there was a down payment," and then they get a little bit of sticker shock when they see, okay, wait, there's all these other costs as well. So we want you to be aware of that. So how much to save in budget? Like if you look at that, then down payment plus closing costs can be anywhere from $25,575 to $93,575, depending on how much you're going to put down. And again, we're being conservative here. You know, this is a big ugly number. Often we can whittle it down a bit, but again, we want you to be eyes wide open on a purchase. So now I want to give you some examples here of what scenarios would be. I'm buying this condo, this $400,000 condo. If you put 5% down, 10% down, 15% down, or 20% down. So obviously there's a drastic difference of putting 5% down, which is $20,000, all the way up to 20% down, which is $80,000. We always want to educate our clients to really ask yourself, you know, where could your dollar better be serving you? Is it better to bring $80,000 to the table? Or would you be better off bringing $20,000 to the table and putting that $60,000 into the stock market, for example, or what have you? So we really want to empower you with the knowledge so you can see the numbers, and ultimately you can make a decision that's best for yourself and your family. So if you look at this scenario though, 5% down, looking at it we look at the principal, interest, taxes, and insurance. It's about $2,319 for a $400,000 home. Then you go to the 10% down, we're at $2,195. 15% down, we're at $2,071. And 20% down, $1,941. So again, you could ask yourself, you know, do I want to put 10% down? Do I want to put 15% down? And what we do for all our clients is we always cost this out. You know, some folks are saying, no, I want 20% down, that's it, no matter what, and that's fine. But we also want to make sure you at least know the numbers based on, so you have choices. They're like, can't emphasize enough. Sometimes Uncle Bob is going to insist on you putting 20% down because that's what he did. But the reality is that mortgage insurance isn't as bad as it used to be. And you know, you can ask yourself, oh, do I want to pay $133 in mortgage insurance more versus bringing $80,000 to the table? You know, that $60,000 difference is $133 more a month versus $60,000. You know, so again, we want you to have the numbers, so ultimately you make the decision and have your eyes wide open. So moving on, I'm going to hand it over to Liz to talk about the life cycle of a typical transaction.
Thank you, Caleb. That was great. And yes, these interest rates right now are just so low and great. So we are hoping that everybody here walks away and is able to take advantage of that right now. So I'm going to talk to you about what the life cycle of a purchase transaction looks like. This is something that I would normally be sitting down and having a conversation with you over a cup of coffee. And of course, I, as your buyer's agent, will always be there, you know, every step of the way to explain this over and over again to you while we're in the thick of it, of course. But my main goal when working with buyers is just to make sure that they feel comfortable so that you can navigate a purchase transaction successfully and you understand what's coming. And the reason that I like to go through all of this is that once you kind of get underway, it can really feel like the ball starts rolling quickly. So again, it's just my goal to explain all of these steps to you as best I can up front, and then that way you have a pretty good idea of what to expect. So step number one is deciding to purchase a home, which you guys have probably already done since you are with us tonight. Whether that is just something that's been a goal of yours for a long time, or you've been looking on all of the real estate websites and curious about what you can afford, here you are. So we're very happy to have you. The next step is selecting your loan officer and your realtor. So obviously Caleb here has a ton of knowledge in the industry and about the market. And, like I said, I love working with buyers and sellers, but first-time buyers especially. It's just a really great honor for me to be able to walk you through something that is a big purchase. So of course we would love the opportunity to represent you, but it's important that you also have a good rapport with your team. You need to be comfortable with who you're working with, because they're going to be guiding you, and of course managing both the financial part of it and the logical and the emotional side of it too. So you need to be comfortable with your realtor and your loan officer. Number three, the step is to go to Caleb and get your mortgage pre-approval letter. If I start working with a buyer, if somebody reaches out and say, hey Liz, I'd like to buy a home, my first question is, do you have a pre-approval yet? Or are you using a mortgage to buy a home? If you're using a mortgage, have you gone through the pre-approval process? That's my number one question. It is by far and large the most important thing to do. And the reason being is that it takes a little bit of time, not too much time, of course. It's very easy nowadays. You could go straight to most lending institutions' websites. Compass has a very, very easy online application. You submit a little bit of info for them, and they're able to turn around a pretty comfortable price range that you would be working with in your home search. Of course, there's more information that's needed down the line, but this pre-approval letter allows you to understand what price range that you're looking in while you're out there house hunting. And there's a few different things that go into that, of course, because you might find a home that is on the lower side of the purchase price, but they might have really high taxes or really high monthly association fees. And all of those things, are cash out of your pocket. So it's important for your lender to explain to you what it is that you're comfortable affording each month. So I usually like to make sure that all of my buyers are pre-approved before we go out and start house hunting. The other important part of that is that if you aren't pre-approved and you find a home that you absolutely love and you come to me and we whip together an offer and we try to get it for you, there's a good chance if we don't have your pre-approval letter ready, the seller is not going to take your offer as seriously as they may take another buyer who already has all their ducks in a row and is literally got the bank's thumbs up, we will back this buyer in this loan transaction. So it's very important. Fourth step is telling me what it is that you want out of your home. It's kind of the fun part. You get to sit down and really think about what's important to you based on where you've been living now. What are the things that you'd like to improve? What are the things that you don't like that you want to make sure you don't, have to deal with in your next house? This sort of thing, it really runs the gamut. It's, bedroom count, bathroom count. Do you need parking? How much do you value outdoor space? What neighborhoods would you like to be in? Do you need to be close to public transportation or a highway? Work from home space is really valuable right now. So all of these things, we do our very best to filter through as we're creating a search for you. And no home has everything unless you have an unlimited budget, of course. So what I like to say is, if you make a wish list of 10 things that you'd love from your home, if you get anywhere from 7 to 8 out of 10 in the very end, you've got yourself an amazing home to grow into, and you're good going. So the next step, once we have that list, is we start the fun part, which is house hunting. This is kind of broken up into 3 different areas, I like to say. One, you're probably already perusing the internet. We're all, mobile friendly these days. A lot of great apps, which are very user friendly, which help you, kind of filter through different homes and criteria. The second part of house hunting is going to open houses. This is something that you don't necessarily have to do with me necessarily. You can go on your own, which is really nice, and people like that convenience. I will always give you a list of good questions to ask an agent if I'm not with you when you go to an open house, so that you can get a good feel for the home as opposed to just like what you see, materialistically. And then of course, the third part of the house hunting is going out and scheduling private showings with me. I take care of all of that for you. I, take care of the scheduling with the other agents, make sure that we get in, when it's convenient to your schedule, of course. And, that way I get my eyes on the home with you. And, we just make sure that we stay within your criteria, and I'm kind of helping to filter out what I think good options for you would be, and also steering you away from some homes that just really might not fit you well. So next step is submitting an offer. So this is the fun part. This is when you really become serious and you feel like you found the home that you love and you want to try to get it. So what you do is you tell me, Liz, I'm ready to write an offer here. I will go home and I pull all of the comps in the area. Comps are comparable properties, and I like to look at everything that's kind of closed and for sale in the market, very similar to the type of unit that you're looking to buy, whether it's a single family or a condo. We look in a tight radius, and we come to a good starting offer price, something that isn't terribly offensive and a low ball. I'll steer you in the right direction from doing that. And I will also be able to let you know, wow, this property is priced so well, like this should sell within days. We really need to, be competitive with our starting offer price here. The negotiation process, that usually takes anywhere from 24 hours on the fastest side up to a few days. That can depend on a lot of things. The seller's schedule, if they're in town or not, work schedules. So it can take a little bit of time to come to terms. But some of the terms that are most important when we're negotiating offers, of course, the number one thing that most people look at is purchase price. But secondly, we have closing date, which can be very valuable both to a buyer if they're in a lease currently, or to a seller if they may need more time to close on the home, or if they are, if the unit is vacant and they are ready to get it done in 30 days. So closing period is actually a really valuable negotiating term. We also submit earnest money, which I'll explain more in depth, but that essentially earnest money are small deposits that you make throughout the contract contingencies. And those protect you as we move through each stage of the transaction. And then, of course, your financing, we drop that in as well. And then other things like tax proration. There's a lot of different variables that we can negotiate. But anytime we're going back and forth, as soon as we have a counter offer and then come to an agreement, that means both parties have signed on the contract, and then the listing agent will mark it as contingent in the system, which means that they are holding their property for you until we get to the closing table. So the next step is immediately once we go under contract, we kick off what we call attorney review and inspection. You may see this labeled as AI, and that stands for attorney review and inspection. It's important that we get this rolling immediately after you go under contract. We usually have the inspection scheduled within 3 to 4 days, sometimes sooner if we can, after you have an accepted offer. And the reason that we do that is because it's very important. You want to know exactly what state the home is in. The inspector is going to literally go through the home with a fine-tooth comb, and they're going to tell you everything from your toilet has a loose handle, or this is unstructurally sound and it needs a new roof. They're going to tell you everything. And we want to assess whether or not this home is something that you're willing to deal with certain issues if if they're big, if they're small, you know, what you're willing to invest in the home and what condition it's in. And we want to know that as soon as possible so that if for whatever reason we needed to cancel the contract, you can get on with your search and the seller can put the home right back on the market and hopefully fix what needs fixing. The attorney is very important in this process. They are your legal representation, and they will do everything from requesting documents from the association if you are purchasing a condo. They will look through and make sure that the title is clean on the home, and that the owner is who they say they are. They do basically all of the communication back and forth with inspection items that we might want the seller to fix or provide a credit for. So the attorneys are really important in this process. And then as soon as the inspection is complete and the attorney review items are agreed on by both parties, then we complete the attorney review phase. You then submit a little bit more earnest money, but that is a thumbs up to your lender. So Caleb's team, if they know, okay, we've just cleared attorney review here, they will order the appraisal and make sure that the home is a value that they are willing to back, and hopefully it's a really, really good deal for you. Once the appraisal is complete, if it is sufficient and checks out to the value that you're paying, then they go to the final stages of underwriting and getting your loan cleared to close. As soon as the loan is cleared to close, you are about 95% there to the closing table. We recommend that you don't make any big purchases between the time that your loan is being underwritten and when you close on a home. So even though you might be very excited, don't go out and buy a big sofa or finance a car or anything like that. We want to make sure that your loan is in good shape until we get to the closing table. But once that loan is clear to close, you are pretty much smooth sailing. Of course, you know, the whole team, myself as the buyer's agent, Caleb's team, your attorney, everybody is in constant contact, making sure that you are completely aware of what your next steps are, the amount of money that Caleb was talking about in terms of your closing costs, everything that you need to get to the closing table and what you should expect when you're there. We make sure to communicate that with you or to you as much as possible so that you know exactly what to expect. We also schedule a final walkthrough on the home just before we close, and that's your final, you know, your final time to get in there and just make sure that the seller has moved out and that the home is in the condition that you expected it to be in from when we were doing showings and the inspection, etc. And then we get you to the closing table. In a pre-COVID world, I would typically be there with you, as would your attorney and even sometimes your lender. But nowadays, it's actually a pretty quick process. You just have a bunch of documents to sign, but we try to make it as painless as possible. And you get your keys that day, and you can do with the home with what you want. So all in all, you know, it's there's a lot of steps here that we covered, and like I said, it might seem overwhelming, all of you know, what I'm talking about here, but it does move a little bit quickly. I would say from start to finish, once you find the home and go under contract, it's anywhere from a 30 to 45 days, sometimes a 60-day closing period, all dependent on what you've agreed with the seller. So you know, we just say, get ready, trust us, we'll make sure that we guide you in the right direction, and it's fun. It's great. So that is all I've got for the purchase transaction.
Awesome.
And now we will open it up for questions. So don't be shy.
So, Jessica, are you okay? Okay.
Yes, I am on. Caleb, Liz, can you guys hear me okay?
Yeah, we can hear you. Can you hear us?
Okay, perfect. I can. I was just experiencing a few audio issues. I'm going to leave my webcam off so that hopefully doesn't impact our conversation here back and forth. But some questions here that I do want to share with you guys that are coming in. First thing, perhaps both of you could speak to this in regards to the low inventory situation that we're, kind of seeing right now and that we've seen for a while. Do either of you foresee that changing, or do you foresee that kind of staying and that being a situation for us for the long term?
Want me to answer?
Go ahead, Liz.
Okay, so, historically, I would probably be able to talk about trends, especially since Chicago is a very seasonal area of the United States, and we tend to, spike in terms of activity and inventory at certain times, and then we dip in other times. But honestly, since the pandemic hit, kind of all trends, all theories that we are used to seeing have kind of gone out the window, actually. We are seeing a little bit of a lower inventory right now, but I would say that honestly, at the $500,000 price point and under, homes are just flying off the market. If they are priced appropriately, and if they are in good condition, I am not seeing condos stay on the market, regardless of the neighborhood, usually for no more than 2 weeks. So the luxury price point, and once you kind of get into some of the single family homes, those markets, inventory always tends to stay a little bit lower and stay on the market for a little bit longer. But I honestly, at least from what I'm seeing, I've got buyers that are out there chomping at the bit. They can't wait to get something, and usually as soon as they see it, it might be gone in a few days. So from what I'm seeing, we have to act fast. And, historically, again, the Super Bowl weekend was kind of our unofficial kickoff to the spring market. But I don't think that that's the case. I think that, we're going to just start to see a steady incline of inventory as we get through the spring. And, once we dig out from under all the snow and people are really ready to get their next moves underway, I think the market's still going to continue to be pretty hot.
Yeah, and just on that too, I'll say that what we know is in a low inventory market, there's going to be multiple offers. So if you love the house, guess what? So does probably 5 other people, and you want to be able to be competitive and in a position to win. And one thing that a program that we have that is a winning program, we call it our Get Committed program. And what it is that we touched on the pre-approval process, like where when we pre-approve you, we review all your documents, and then we issue a pre-approval saying, based on everything we looked at, you're good to go. Well, we have a program called Get Committed where we take it one step further. So we will pre-approve you, but then we'll go ahead and submit your file to an actual underwriter while you're still shopping for a property. You don't have your property yet. The underwriter will then fully underwrite, and we at Compass Mortgage, since we are the bank, we will issue you a loan commitment where we guarantee the funding of the loan. Our only contingency is appraisal. So typically when you buy a home, you have to be underwritten as the buyer. So the seller might be nervous, like, well, the buyer's going to get underwritten. Are they going to get qualified? Are they going to get the loan? There's always some uncertainty and fear from a seller that maybe the deal will fall apart because the buyer wasn't really qualified. What this does is Compass Mortgage says, no, actually, we've underwritten the buyer, and we are guaranteeing that we can fund this loan for this buyer. Our only contingency is really on the building appraising right, the property appraising right. And what that does is that it's almost like a cash offer where we submit the offer, we can guarantee the funding at Compass Mortgage, and we can also close as quick as 15 days with that if you go through that program. So we have a lot of our buyers right now that are starting to do that just to be in position for the spring market. They want to have that guaranteed funding loan commitment versus a pre-approval. And that's one way to stand out if you're amongst 4 other buyers that are trying that. It can give you a leg up.
Yeah, I would agree with that. It's definitely something that is to your advantage to be able to have that, because when I'm presenting your offer, there is a term on the contract, which is a mortgage contingency date. And that's the date that the lender, is committing to clear a loan. But if you can do that well before the closing date, then it just gives you a huge advantage. And yeah, I've been in I think it was a 17, 18-day close with you, Caleb, and it was a whirlwind, but we got it done, and it helped my buyers secure their property. So it's a really great thing to be able to have, and we just want to be prepared.
Absolutely.
Well, thanks to you both for touching on that question there. Caleb, real quick, is there an additional cost to go through the Get Committed program?
So there's no additional cost.
Approval?
Yeah, so I had mentioned at the beginning of the presentation, our lender origination fee is $14.49. Now, in a typical pre-approval under contract, you'll pay that $14.49 at closing. Now, with the Get Committed program, what we say is you're going to have to give us $300 up front. It's not in addition. It'll be subtracted at closing from that $14.49. But basically, we're saying, look, we're about to hand this file over to a real life underwriter who's going to underwrite and issue a loan commitment. We want to make sure you got some skin in the game. Otherwise, everyone would say, yeah, sure, do that. And so we basically $300 up front, but it's not an additional fee. It just would be deducted from your actual lender origination fee at closing.
Okay, great. Is there a recommended percentage down or for a down payment for first-time home buyers?
I mean, as far as it all depends. Because there's making your offer. Sometimes a seller may look at an offer and say, wow, they're willing to put more money down. They must be a stronger candidate than the one who's putting less money down. However, with our Get Committed program, that takes that away completely because we're guaranteeing the funding. But for the first time home buyer, you can put as low as 3% down is the lowest you could put down as a first time home buyer. Now, if you're a veteran, there's also VA loans where you can put 0% down. You can get into the home without having to pay anything pretty much. So I hope that answers the question. 3% down for a first time home buyer.
Yeah.
I can touch on that a little bit too.
Yeah.
I oftentimes have people say to me, like, I have to have 20%, right? I can't buy a home without 20%. Well, we totally try to debunk that myth. And, in the past, again, in a world where our interest rates were upwards of 3%, 4%, and 5%, putting 20% down was to your advantage because you'd avoid the PMI on your loan. But nowadays, with the rates being as low as they are, I think sellers and all agents are understanding that you might be able to afford 20% down, but you don't want to put 20% down because you want to keep that cash in your pocket because it's so cheap to borrow money right now. And you might want to keep that cash to do, redo your kitchen or renovate the bathroom or do the hardwood floors or just save it for a rainy day. So while, in a competitive offer situation, if everything is apples to apples and one contract has 5% down and another has 20, it might, that might be something that the seller would consider one over another just because of their level of comfort. But I can assure you that everybody nowadays understands why people are putting down less because the interest rates are so low. So don't be afraid if it's something that you are considering. Like Caleb can run many different scenarios for what, your loan options would look like.
That's right.
Okay, great. And just to clarify for all of our listeners as well, PMI, private mortgage insurance, could either of you detail if that is part of your mortgage payment? Is there ever a time when that could be removed or fall off?
Yes, yeah. So anytime you buy a home and you put less than 20% down, which means you have less than 20% equity on the purchase, you're going to pay some sort of mortgage insurance. If you put 3% down, it's going to be a little bit more than if you put 5% down or 10% down or 15% down. But the way that it works is that that's part of your all-in monthly mortgage payment. And on a conventional loan, there's two ways to get rid of it. One, it'll fall off after you've paid principal reduction and achieved that 20% in equity from the principal reduction. But two, as I talked about before, the folks that bought a home in December of 2019 in Chicago and to December 2020, well, their home appreciated 11%. So if they put 10% down on that home, they now have over 20% equity on that home. So what they could do, instead of waiting to keep making those payments, they could call us and say, hey, take a look at this. Maybe we'll refinance into this. We have a 3.65% rate from last year. Now we want a 2.75% rate, and we want to drop our mortgage insurance. We're doing that with a lot of people right now, because when your property value, just by living in your property, each year it'll appreciate, and you create equity without even making payments. You're creating equity. So we take that into account, and we can get rid of that.
Okay, thanks for sharing that. Liz, could you detail what the realtor fees look like for a buyer and how those are factored in?
0. You pay nothing. As a buyer's agent, I make no money. I make 0 commission. You pay me absolutely nothing until we get to the closing table, and my commission is paid by the seller. So the only fees that you ever have to incur when working with a realtor is when you're on the sales side.
Okay.
Let me just say this too, just because from my perspective too, is that often there's confusion on this issue, and often people think, oh, maybe I'll get a better deal if I just go it alone. Well, I'll tell you what, that listing agent, all they're doing is they're getting a bigger commission. Like they're going to get, I mean, and I'll tell you the other piece is that I've often seen people go it alone, and then they end up overpaying. Like Liz is going to do a market analysis, going to make sure that you're savvy in your offer, and like you're going to end up losing if you go it alone, unless you're a professional real estate, do this for a profession. I just can't emphasize that enough. Like I've just seen too many people make mistakes by not working with an awesome agent like Liz to get the deal done.
Yeah, it really is important to have good representation. You know, we could talk about it till the cows come home, but if you were to try to, you know, purchase a home without an agent, there are a lot of things that you would probably be wondering, what do I do next? Who solves this for me? Your attorney's fees at the end of the day will probably triple than if you were to be represented up front and just pay a flat fee. So there's a lot of things that go into it, but just to reiterate, my time is basically free. I'm working for free until we close on your home. But as the buyer, you pay me as the buyer's agent nothing. The only time I make commission is from the seller.
And can I also just say too, because I think some people ask us as a lender, how do we get paid? And we get paid a commission that's based on the loan amount, period. It's not based on your rate. Like if I'm not getting paid more if your rate's higher or less, like we get paid a straight amount based on the loan amount. So whatever your purchase price is, the loan amount, that's how we get paid, just to be clear.
Okay, thanks to you both for sharing that. In regards to attorney review period, someone's asking, may I select my own inspector as well as my own lawyer, or are those both recommended parties?
I always give my clients the opportunity to work with whomever they are comfortable with. If you, have a friend of a friend or a coworker or a family member that has used an inspection company in the past and you would like to use them, as long as they are licensed and familiar with the Chicago residential market, that is all I care about. There are tons of different inspection companies out there. So many oftentimes I feel like I'm working with a new one 2 or 3 times a week. Do I have recommended companies that I work with and that I trust? Yes. And if you do not have any idea of who to use for an inspector, of course I will give you my recommendation. There's no kickbacks whatsoever involved in that. It's just me wanting to take good care of you. But if you have a connection or a referral from somebody else that has bought a home or knows the Chicago market, absolutely. For attorneys, please just make sure whoever you select practices real estate law. I cannot emphasize this enough. A divorce attorney is not going to be able to walk you through this. My husband is a tax attorney, and he was not comfortable supporting us throughout our home buys ever. There is so much that is involved with real estate specifically, condo associations, Chicago, government, there's so much that a real estate attorney is valuable for. So again, I have recommendations. I work with a very tight-knit group that I like to recommend, but if you know of somebody, by all means, work with who you're comfortable with. Just please make sure they practice real estate law.
Okay, thank you for that great tip, Liz. Caleb, how many days is the rate lock valid?
So that's a good question. And there's different rate locks. So there's a typical rate lock could be a 30-day, a 45-day, a 60-day, all the way up to 90 days. Now, how that works though, the longer the rate lock, the more expensive it is, if you will. Like the rate, you're going to get a better rate on a 30-day rate lock than a 90-day, okay? Because you're securing that. So what we typically do with our clients is we'll look at rates with you on the pre-approval process. We'll kind of look at, okay, what's the market doing? And then we'll put that rate in there, and then we'll keep an eye on it. And we'll make sure that we're monitoring it. We usually put an alert on it because we typically like to lock 45 days. Once you start to get to 60 days and 90 days, that 2.75 is going to be more like 2.875 or almost 3%, like if you want to go that far out. So 30 days, 45, 60, 90, but typically we do 30 to 45 day rate locks. However, if you're like, you know what, lock that rate at 60 days, I'm good, we'll do it. At the end of the day, we do what you tell us to, but we're going to give you guidance and advice. But what we do is if we tell you, hey, we think we can float this rate to 45 days and that you'll be fine, we'll honor that rate. We'll make sure you get that rate.
Okay, great. How long is a pre-approval or the loan commitment valid for?
Yeah, so basically it's good for as long as your credit. So when we pull your credit, that's good for about 90 days. So the pre-approval is good for about 90 days. And really though, all that means is that we're going to update things. So just really quick, what goes into the pre-approval process is we look at your income, we look at your debts, we look at your credit score, and we look at your source of down payment. Those are the 4 things we look at. And on those things we look at, for your income, we look at, okay, what is qualifying income? We look at your last 30 days of pay stubs. We look at your last 2 years of W-2s. So what we'll need to do as we get closer, as time goes on, we'll need to update things. Okay, like right now, we're in the midst of, if we have clients that are pre-approved, well, guess what? We need to update with their 2020 W-2 now, because everyone's getting them now, right? Come April, after April 15th, we're going to need to update folks for their that they're supposed to file taxes. We're going to need to update tax returns. So generally speaking, you get a pre-approval with us, we're just going to have to update things. You check in with us if you're getting close to that 90 or close to over 100 days. We're going to make sure we get you updated, but it's a simple process.
Okay, thank you. Someone's asking, I work in the Chicago Public Schools. Is the Teacher Next Door program still happening?
Yeah, that's a market. I mean, I'm just going to be real with you. That's really a marketing program, and those are primarily for HUD homes. These are homes that have been foreclosed on, and we can look at it for you. Like there's a lot of good programs that we can do to help teachers, but that program's a little bit more of a marketing program, and it's more like if you want to buy a home that's a bank-owned home that is in a neighborhood where they're trying, like that they want people to move to. So the short answer is, yeah, it's out there, but typically when we've had clients look at it, they're like, oh, this isn't what I wanted. And generally it's just about helping you with cover closing costs. And the thing is when you buy a home, there's down payment and closing costs. Closing costs can be paid by 3 ways. They can be paid by you, they can be paid by the seller, they can be paid by the lender, or they could be a combination thereof, right? So I know that when Liz and I work together, we're gonna see where you're at, and if you're having issues with closing costs, we'll figure out, okay, how can we help mitigate those costs to try to get you into that home with as little money out of your pocket as possible. But typically those programs are a little bit more of a marketing thing. They're not as good as they sound.
Okay, thank you for sharing that insight. And to the individual who asked that question, you know, as Caleb said, if you'd like more details on, you know, programs and whatnot that could aid you, then definitely reach out to the Kambs Jennings group. Liz, what are sellers doing in terms of like in-person showings? Are people open to that with the pandemic still going on, or is it looking like more virtual showings until you're really serious about a home?
That's a great question. You know, back in March and in April, we had no idea how we were going to sell homes. You know, it was all virtual, and we were walking in, and it was usually just myself with my camera and doing a FaceTime virtual, you know, like Facebook Live open house. Things have obviously opened up a little bit more. You know, Chicago's trending in the right direction. Vaccines are starting to be distributed. So I think that with the understanding that everybody wears a mask, you know, at all my listings, I have, you know, a box of gloves, I have masks available, and I have hand sanitizer as well as Clorox wipes. That's about all we can do. As well as like during an open house, maybe saying, okay, no more than 4 people in the home at a time, and please socially distance. Like, you two go upstairs and you go downstairs, and I'll stay on the middle floor, that sort of thing. But the short answer is it's entirely up to the seller's comfort level. So if the seller instructs their agent to screen buyers by, you know, doing a video walkthrough and making sure that the buyer sees the video walkthrough and still says, yes, I like it so much, I now want to come in person. You know, that's totally up to the seller. It's their home. But I would say right now, I mean, we're in February, the spring market is officially kicked off, and sellers are motivated and buyers are out there really motivated. And so I think that everybody is opening up their homes, and we are just taking the best precautions that we can. If it comes to that where it needs to be a virtual showing first, you know, we'll do it, and maybe it'll help. Maybe you'll watch it and say, actually, I didn't think that space felt the same. Or, you know, absolutely, let's go. But I would say 9 times out of 10, open houses are still happening. Showings are happening regularly. And we're just all taking the precautions that we've been used to now for the last year.
Sure. I think this next question, perhaps both of you could chime in on this. They're asking, if you're currently renting a home that the buyer wants to sell, are there any steps in the buying process that could be excluded, or any, I guess, insight on how that process would work if you have any experience or knowledge in that area?
Sorry, that the buyer wants to.
They're renting,
so
like they're renting, and they want to buy what they're renting.
Correct.
I mean, you know, typically it's not, so it just depends on the process. So you're renting the home and you're like, oh, I'd love to buy this from my landlord, is what I'm hearing here. I mean, I could let Liz talk about that.
Yeah, to be honest, I have not ever had a situation where it's been a rent to own, so I cannot speak from personal experience. That would be something that we would need to initiate a conversation with the seller of the unit or the landlord, and possibly come to an agreement that is drawn up, which details out what, you know, when it starts, that from moving forward, the amount of rent that you're paying will, you know, contribute towards the down payment or the, you know, whatnot, the sale price. That's usually something that we would leave to the attorneys to draft up. I have to say, in all of my experience, I haven't come across that yet, although I'm familiar with it. So it doesn't happen too often, but that doesn't mean that it's impossible to do. What I would actually do is just probably have a chat with the seller and say, hey, let me represent you in this sale, and I'm going to represent, my client here as the buyer, and we can do this as clean as possible, and everybody works out, well, because the commission fee, of course, the seller wouldn't be paying a buyer's agency fee. There's ways around it for sure. So, I mean, if you're currently in a condo that has a landlord and you want to buy it from them, let me know. And the first step would be reaching out to the seller to say, like, how could we possibly put this together?
Yeah, and I'll also just say this too, though, because I come across folks sometimes that are saying, I've been renting this place, I love it, and my landlord's saying he would sell it to me, and I would just say that get pre-approved, but go look at some other places. And what I find often is that you think that you want the one that you're living in right now, but then you realize, wait a minute, like after you see other properties that maybe you want something different. I have seen some of these kind of go sideways too, because the landlord, like, especially if you don't have any representation. So like, first step is just see how much you can get pre-approved for, and then you can open your eyes up to like, okay, do you still want to buy this home that you've been living in? Maybe you want to buy something else too. So just to make sure that you have the power of choice.
Sure. Okay, so a lot of times in escrow or earnest money, those terms are thrown around. Could you, I guess, provide a little more detail for some of our listeners here on what those terms mean?
Sure.
You want to take earnest money, I'll take escrow.
Sounds good. Okay, so I was talking about some of the negotiable terms when we put a contract together. Earnest money is something that we use here in Illinois. Think of it as like a down payment as you move along the transaction. Earnest meaning in good faith. It is money that you are pledging to the seller that you're going under contract with them. I'm going to give you a small deposit up front so that you know that I'm serious and that I'm not going and putting contracts out on multiple homes across Chicago. That money is basically your pledge to kind of take it off the market as contingent. Now, the seller does not deposit that earnest money into their own bank account. That would be commingling of funds, and it's illegal. It goes into an escrow account, which is typically held by the brokerage of the seller's agent. So, for example, I work for Keller Williams. If I was the one that was listing the home, a buyer, who might be working with another buyer's agent would write a check to Keller Williams, and my brokerage would hold that earnest money. I don't deposit it, the seller doesn't deposit it. And then you, like I mentioned, we go through the attorney review phase, and then we go through the inspection phase. Once that is complete, you then deposit the remaining balance of your earnest money because you've then just completed another contract contingency. That is typically a larger amount. I would say what is standard is anywhere from 3 to 5% of the purchase price. But remember, your earnest money is part of your down payment. It is not in addition to your down payment. So when you get to the closing table, it's going to show up as a credit that you've already put, $15,000 down in earnest money. So you only have to bring the balance of what your down payment would be.
That's right.
And again, the earnest money is designed to protect you as the buyer throughout every contingency in the contract. So if anything should fall apart and something came up and it was a total deal breaker and we canceled the contract, you get that earnest money back.
That's right. And that's why it's important to have a great attorney too, because that's what they do is that real estate attorney is making sure that you don't breach contract and they protect you so you get that money back if needed. And also on the escrows too, the other point is that when you buy a home, if you put less than 20% down, you're required to escrow your home insurance and your property taxes. And all that simply means is that you're going to, every month you're going to be paying, you're not just paying for your principal and interest of the mortgage, you're also going to be paying monthly for the property taxes of the home and your homeowner's insurance. and that's your servicer of your mortgage is going to hold that in an escrow account. And then what they're going to do is when your tax bill comes due, they pay the tax bill. When your home insurance bill comes due, they pay the home insurance. And a lot of people like that anyway, because then you can kind of set it, forget it. You don't have to worry about paying your property taxes, and when they come due, they're already taken care of because you've been paying that in your mortgage payment.
Okay, awesome. Thank you both so much. I know we are hitting time here for this evening's webinar, and I don't have any other last minute questions coming in. So just want to thank you both for taking us through a lot of the home buying process and what goes into it from a lending as well as real estate perspective. So thank you both for providing your great knowledge and expertise.
Absolutely.
Happy to do it.
And I just want to thank everyone. And again, if you need any help with anything, just reach out to us. We'll be following up with you. Liz Jones is an amazing realtor. I've worked with her a ton. She does a great job. All of our clients love her, and I can't recommend her enough. So if you need an agent, you should definitely reach out to her. Kambs Jennings Group, reach out to us. We'll help you out. And we look forward to working with you.